Fine. This is a sum of merger, sole trader plus sole trader. Arish, can you please read this sum? It is October-November 2020, paper 32. Arish, can you please
Okay.
read the sum?
Yes, miss. Alice and Babak both have been trading as sole traders for some years when they decided to merge their businesses to form a partnership. The merger took place on 1st January 2020. The book value of assets and liabilities of the business immediately prior to the merger were as follows.
Okay, can you
The
stop?
tra-
Can you tell
yes,
me these books' value will help us to find what? These book value that is given to us for Alice and Babak. This will help us to find out what?
The NATO.
The NATO. What is NATO?
net assets taken over.
Net assets taken over. Okay, read ahead.
The terms of the merger were as follows. The profit sharing ratio of the partners should be Alice 2, Babak 1.
Okay,
Alice's premises would be revalued at 32,000.
okay. Can you see I'm
Part of
putting a tick? When they say Alice's premises would be revalued at 32,000, I'm putting a tick on Alice. Okay, read ahead.
part of Alice's inventory valued at 400 would be written off.
Okay,
An impairment loss of
impairment.
$800 impairment. An impairment loss of $800 on Babak's vehicle would be accounted for.
Okay,
Alice would transfer her personal vehicle to the business at a valuation of $2,000.
can you tell me when a partner brings in any additional thing into the business, what is it called? Additional capital? What is it called? Additional capital. Okay, fine. Then go ahead.
The bank accounts would be merged and Alice would pay in enough cash that the value of the capital accounts would be in the profit sharing ratio.
Okay, now understand the meaning of this adjustment. They have already told us that the value of the capital account would be in the profit sharing ratio. When they say you that the value of the capital account is in the profit sharing ratio, that means whenever you are making the capital account of Alice and Babak, whenever you're making the capital account of Alice and Babak, the closing capital, that is the balance closed down, whatever it will be, the balance closed down should be in the profit sharing ratio. What is the profit sharing ratio?
2:1.
2:1. See, they are saying bank accounts would be merged and Alice would pay in enough cash that the value of her capital account would be in the profit sharing ratio. That means Alice's capital, closing capital, will be twice of Babak. Or alternatively, they are telling us that the closing capital would be in the ratio of 2:1. Whatever is the balancing figure should be brought in through cash. First, try to digest this part. This is the most important part and the part that is confusing. Tell me if you have any doubts, I am here. Try to understand this and write the effect of this.
So you have to merge both the accounts, like both of the bank accounts, right?
No, you don't have to merge both of the bank accounts. They say that Alice would bring in some cash. Okay? How much cash I do not know. They are telling that Alice would bring in some cash. How much cash I don't know. But after bringing that cash, whatever would be the capital account, whatever would be the closing capital, the closing capital would be in the ratio of 2:1. Are you with me?
Yeah.
They are telling that Alice will bring in enough cash that the value of the capital account would be in the profit sharing ratio. You need to understand that she will bring some cash. I don't know how much cash. After getting that cash, if she's going to bring the cash into the business, can you give me the journal entry for it? If Alice is getting cash into the business, what would be the journal entry for it?
Yeah, so cash debit
Hmm.
and
Money is coming in the business, so money is coming in, so cash would be debit. And what would be credit? Who is bringing it? Alice.
Alice.
So I will credit Alice capital account. Are you with me?
Yeah.
So
Yes,
Alice
miss.
is going to bring in some cash, I don't know. But whatever cash that she will bring, after that, when I close the capital account, I will get my closing capital in the ratio of 2:1. Okay. Now let's start. Before I go to this sum, we should know about revaluation account. Do you all know about revaluation account?
Yeah.
Okay.
Miss,
Others,
is it the same partnership?
revaluation account? Yes,
Is it the
it is
same
the
as in?
same as admission, retirement, yeah, that. Okay, tell me what is the fundamentals of revaluation account?
Debit side is when an asset increases and a liability decreases.
Okay, others, do
And
you know about it or do you want me to explain it?
Miss, can you explain it?
Yeah, no problem. See, whenever there is a change in the partnership, when I say that whenever there is a change in the partnership, it means that whenever there is any admission, retirement, debt, dissolution, merger, acquisition, or change in the profit sharing ratio, at that time you have to revalue your assets and liabilities, and whatever is the profit or loss on revaluation should be given to the partners in their old ratio or in their respective ratio. So when I talk about revaluation, all the good things will happen over here and all the bad things happen on the debit side. So when I say all the good things happen on the credit side, that means the assets value is going up is a good thing. Assets value going down is a bad thing. Liabilities reducing is a good thing and liabilities increasing is a bad thing. Okay? If your good is more, if the good is more than the bad, then whatever you get is called the profit on revaluation. What is it called? Profit on revaluation. It is credited to the partner's capital account. So profit on revaluation will be debited over here and it is credited to partner's capital account. Are you with me?
Yes, miss.
So in the partner's capital account, profit on revaluation will come on the credit side and loss on revaluation would come on the debit side. Any doubt?
No, miss.
No, miss.
Now understand one thing. If they ask you to make a revaluation account, you will do all the adjustments together and transfer the final profit or the final loss. If they don't ask you to make a revaluation account, then individually you will revalue it and profit you will transfer on the credit and loss you will transfer on the debit. Now we will take the question and we will see accordingly and we will put this concept. It will be very much clear. Come on, A part. Two items that is purchased by a business which could be included in intangible assets. Can you tell me?
Goodwill.
Goodwill, okay. Two items that the business can purchase and you could put it as an intangible asset. Give names of intangible asset.
Copyrights.
Goodwill, trademark, copyrights. Patents could also be an answer. Franchising could also be an answer. So this is goodwill. Acha, when you say goodwill, please ensure that you write purchase goodwill, okay? It will become more precise.
Okay, miss.
With me?
Yes.
Now they want you to show the adjustments which are over here, and prepare capital account for Babak and prepare capital account for Alice, and they want it to be prepared separately. They don't want it together, they want it separately. So I am preparing it separately. Those who have notability, I think, no, there is no space for the format. This sum is also there in the book that I have given to you. So just see this sum, otherwise just do it in your book. If you are not finding it in the book, then do it in your notebook. Can we start?
Yes, miss.
We have to
Yes,
prepare Alice and Babak capital account. Come on, tell me, capital account always has what balance?
credit.
Credit balance. From where will you get the opening balance of Alice? And from where will you get the opening balance of Babak?
Miss, the net asset at takeover value.
NATO. The net asset taken over becomes the capital. How do you find it?
The total assets minus liabilities.
Total assets minus liabilities. Come on, calculate for Alice. It will be 18,000 plus 7,400 plus 200 plus 4,100 plus 2,600 minus 1,400 minus 300. What is the amount that you're getting?
Miss, the intangible asset will also be added.
Sorry? No, intangible asset will not be added. Wait. What is the amount?
Is it 30,400?
It should be 20.
30,400.
Sorry?
30,400. I'm getting the same.
And for Babak?
1 minute.
Miss, is it 24,800?
24,800. You will add the intangible asset, darling. Because there is nothing that is mentioned, right? Without goodwill adjustment or with goodwill adjustment. So this will become 30,600. Alice 3,600, Babak 24,800. Are you all with me?
Yes, miss.
All the girls?
Yeah.
Okay, fine. After I get the capital accounts, now I will see the adjustments. Come on. First adjustment. Alice premises is revalued. That means the value of the premises is going up and it is becoming 32,000. Tell me, is it a good thing or a bad thing?
Good thing.
Good thing. Of how much?
14,000.
It is a good thing of 14,000. Okay. That means there is a profit on revaluation. Profit on revaluation will go where? Debit side or credit side of partner's capital account?
Credit side.
On the credit side of the capital account, what will I write? Premises. 14,000 is a profit on revaluation. Now, why I do it individually? Because I have not been asked to prepare a revaluation account. Sometimes they might ask you to prepare a revaluation account. With me?
Yeah.
Come
Yes.
on.
Yes.
Inventory valued at 400 should be written off. That means 400 of inventory will go away. Good or bad?
Bad.
Bad.
Bad. Which side will I record it?
Debit.
Debit side.
The profit on revaluation comes on the credit of partner's capital and loss will come on the debit side. What is it? Inventory. Are you with me?
Yes, miss.
Come on. Impairment loss 800. Loss on impairment 800 on Babak's vehicle would be incorporated.
Debit side.
Debit side of which account?
The capital account.
Babak's capital account. What will you write? Vehicle. I hope everyone has watched impairment video.
Yes.
Arij and Upinder.
No.
Yes, miss.
Okay, then do it today. Okay.
Yes, I will.
Okay, fine. So there is an impairment loss of how much? 800. Can you all tell me when does an impairment loss occur? Can you all tell me when does an impairment loss occur?
When carrying value or the net book value is more than the
When
recorded
carrying
value.
value is more than the market value. Or the carrying value or net book value is more than the recoverable amount, right?
Yeah.
Yes.
Okay, fine. So can you tell me the recoverable amount of this asset? Of vehicle?
14,400
Minus
for
the
4,000.
loss. So the recoverable amount of this asset is 4,400. Okay. Let's read the next adjustment. Alice would transfer personal vehicle to the business at 2,000. So what is this additional capital? Is it additional capital?
Yes.
For Alice, additional capital will be written on the credit side and I will write 2,000. And I will add 2,000 to my vehicle. Are you with me? If you're seeing simultaneously, I am doing the adjustments also. Yeah? Simultaneously, I'm recording the new values on my question. Come on, now look over here. This is the most important part and the most twisted part. Bank account would be merged and Alice is going to bring cash. That means it would be cash debit and Alice capital credit, right? So Alice is going to bring in cash and this cash would be so much that the balance closed down would be in the ratio of 2:1. Are you with me?
Yes, miss.
Yeah.
Yes, miss.
Everyone, are you all with me? That means for Babak, there is no issues. Only Alice is going to bring in cash. So I can close Babak account because they are telling me only Alice is going to bring in cash. So the closing balance of Babak becomes how much? Are you with me?
Yes, miss.
Everyone with me? 24,000. Now I will say, for one share, Babak is getting how much? How much is Babak getting? What is the closing capital?
24,000.
24.
4,000. So for 2 shares, what should be Alice's closing capital?
$48,000.
24,000 into 2. So for 2
48.
shares, her closing capital should be how much? 48,000. So to make her closing capital 48,000, that is equal to 2 shares, how much cash she should bring in? This will become my balancing figure. So it will become 48,400, 48,400. From this 48,400, what will you deduct? 3,600 minus 14,000 minus 2,000. So can you tell me
1,000.
how much cash will she bring in?
1800.
1,800. Now another thing that I want to put forward. Do you see any cash account? Do you see any cash account in the question?
No.
No.
Will
No.
be bank.
You will write bank. I hope this is clear. Alice is bringing cash so that her capital becomes equivalent to the profit sharing ratio. That means you have to find closing capital, and the closing capital should be in the ratio of 2:1. Check if the closing capital is in the ratio of 2:1. Is the closing capital in the ratio of 2:1?
Yeah.
Yeah. So we are done with the capital account of Babak and we are done with capital account of Alice. Now we can prepare our statement of financial position. How will we prepare for merger the statement of financial position? Tell me.
Add all the accounts. We add the accounts.
Add the accounts. Come on. First, in non-current asset, have they told you anything about goodwill adjustment or anything such? Have they told you anything that it should be with goodwill adjustment, without goodwill adjustment, anything like that? Nothing.
No.
So we will write whatever is given to us. So we are going to prepare statement of financial position. The first thing that we will have non-current assets, and there is a system as per IAS 1. You should always record the intangible assets first and then the tangible assets. So I want you to look at the adjustments which is there and try preparing the statement of financial position yourself. You can ask me questions if needed. So the bank account would become how much? 6,100 minus 300 plus what Alice is bringing in. What is the amount that Alice is bringing in? 1,800 plus 1,800. So bank account will become 7,600.